Good afternoon, everyone. Thank you for joining us. Today we have an update with Maple Gold. President and CEO Kiran Patankar and VP Technical Services Ian Cunningham Dunlop are joining us. Mid-July, Maple released final assay results from the winter drill program at the Douay Gold Project in Quebec. The format of today's session will be an update from Kiran and Ian, followed by Q&A. Please enter your questions into the Q&A box at the bottom of your screen. And as always, today's presentation will contain forward-looking statements. If you'd like to learn more about those, you can find them in the presentation on the company's website. And good to see you, Kiran. Hello, Ian.
Great to see you, Magda, and thanks to Adelaide for having us.
Good morning, everyone.
What I'd like to do is, I know there's going to be some questions from the audience. I think we're going to address quite a few of them as we go through presentation. So I thought we would just start by running through a presentation, Ian and myself. It's going to recap the successful drill program that we just concluded at Douay. It's going to talk about what's lining up for the second half of the year, and we should get through it in about 20 minutes, then we'll turn it over for audience questions. As a reminder, as Magda said, during the course of the presentation, we will be making forward-looking statements. Just to highlight again where Maple Gold is, what we are, I think most of you that are on the call know who we are, where we are, but we are arguably one of the more undervalued and asymmetric sort of value opportunities in a buoyant gold market, with a 3 million ounce resource base and growing in the Abitibi. I think we stand out on all these metrics that you look for in terms of risk reward. We've got 100% ownership of the projects. We've got an established 3 million ounce resource at Douay. We're one of only 7 companies with 3 million ounce plus resource in Canada that's located near infrastructure. We also have a past producing mine trend, great team with Ian, as well as a deep bench with lots of mine building, mine exploring, and capital markets expertise. Great partnership, lots of organic growth catalysts, including stuff setting up well for the second half of the year, answering a lot of questions on potential development paths, as well as high upside exploration, and a great shareholder base, some of whom I'm sure are with us today. Despite all of that, Maple trades at $8 an ounce, thereabouts. I think that's really where the value lies, is I think a re-rating is imminent. I think you're going to see some good things coming from the company going forward. And, I think this is probably one of the best opportunities amongst the junior gold explorers in Canada. We've talked about the evolution of this project from 2021 to 2023. It was a joint venture with Agnico Eagle. We spent $25 million as a JV with, not as much bang for the buck as I think everyone was hoping for. And there were some issues, right? And I took over, we reset the project, we restructured the JV 2024. As most of you know, there was a lot of deal setting the stage for success in this buoyant gold market. You can't just go out and drill without a proper platform. So we did a lot in 2024, including great technical work by Ian and the team to get us set up for really what's been an exciting start to 2025 with a 12,000 meter expansionary drill program now completed at Douay. Was completed on time, under budget, 100% success rate in terms of gold intersections, achieving corporate objectives, with some key technical insights, which we'll get into. We've got a very cost-efficient model, a great team, great engagement with First Nations, and no safety or environmental issues. So great execution across the board. You're going to hear from me. You're going to hear from Ian, of course, today. But I just want to highlight that on the technical side, as I mentioned earlier, we do have a tremendous support team amongst our board, technical advisors. And when you look at the expertise in Quebec, in VMS exploration, in mine building, in advanced development, as well as large company exploration, we tick every box from a people standpoint. And of course, the team at site is doing a phenomenal job. Just in terms of what we accomplished in the first half of this year, you look at Douay, right? It did not see really systematic exploration. Even, going back to the history of the joint venture, there was a lot of gathering of data, but not a lot of processing of that data and incorporation to really drive high return on investment type exploration and things that can materially advance the project. We completed a 21-hole, 12,000 meter program under budget at $300 per meter, all in, versus $400, which we budgeted. And we extended, importantly, 2 key zones at Nika and 531, which have high grade, which indicate that there's potential for bulk tonnage underground. And Ian will get into that here in a bit. We've also, over the summer, we've now completed a 27-hole, 730-meter sonic drill program. This is focusing on the regional potential. We know we've got a 3 million ounce resource base already, but our objectives have always been to show the path, not only to get from 3 to 5 million ounces, which is really even rarer territory for gold deposits in Canada amongst juniors, but also show what the new discovery potential is by advancing targets across the property. And we think with the sonic drilling, we're early indications of a potential Douay lookalike. Ian will get into some of that. We've got assays pending there. We did do some claim staking, low cost, in the Taibbi group sediments, which are very prospective north of Douay. We added 128 claims and increased the property size by 17%. We do have an important mineral resource estimate in progress, and it's pending for Q4 of 2025. We expect to see increases based on conservative gold prices, maybe slightly lower cutoffs, but I think it's gonna grow from where we were certainly in 2022. And it's based on roughly 20,000 meters of drilling. We've got a better model. We'll show you sort of what that is and what that looks like here as we move forward. As I mentioned, we've done this summer surface exploration program focusing on new discovery targets throughout the property. At Joutel, we've completed data review and targeting exercise. We're in the midst of permitting and identifying the drill targets that we have for Joutel for the second half of this year. Block modeling on some unmined areas at Eagle Tellbell. We think that there's good potential to have a maiden resource here at Joutel, supporting our resource update in later this year. And then, as I said, permitting's underway for a modest program based on what we budgeted for the year in terms of exploration was 6.3 million. So we've got that fully funded, testing near mine and new targets in the second half of this year. We learned a lot from this program, okay? We have a much better understanding of host lithologies, deformation, alteration, et cetera. The geologic model is more robust than it's ever been. We know what the relationship is with mineralization, with the intrusive complex, as well as some of the structural and alteration signatures within the Douay system. We still have a very deep system, in which carbonatite and lamprophire is present. Those are mantle tapping type rock types that show that the system is deep. As I said, we know not just the alteration, but the specific alteration assemblages that are key for gold mineralization. We're using those for targeting. We're noticing plunge controls on this high grade, particularly to the southeast, which we'll get into when you see the sections. And this Nika and 531 zones, look, I believe we've just begun to scratch the surface there. We've extended, between 200 to 600 meters down plunge from modeled open pits. So you're going to see gains in those areas where we've drilled. But importantly, it's going to form part of what's going to be a trade-off study and comprehensive mine plan coming up later this year. In terms of next steps, we plan to do immediate follow-up at Nika and 531. We've got 10 to 15,000 meters of drilling currently being targeted. We need to do a bit more work here to try to figure out exactly where we're going to go. And of course, we're going to need to decide which of those targets are priorities, which of those targets we can drill. We usually drill in the winter. So some of these zones at Nika and 531 we can get back into before the ground freezes. But stay tuned on more details on the immediate follow-ups. We do see significant potential to add to the resource between, around, and below the model pits. And then we've got this parallel track, as we stated, going back to early this year, that we also are a development company. We're not just strictly exploration. So, we've brought people like Ian and Darwin and others on board with advanced project development expertise to really help advance and de-risk the project, showing that we can do a proper resource update where the resources grow, but the quality of ounces increases, and doing proper scoping, trade-off, and preliminary economic studies that can inform potential PEAs maybe by mid-next year. To recap where we are, it's a great project. It's blessed with infrastructure. It's in the heart of the Abitibi. It's surrounded by mines. And as I said, it's one of just, a handful of projects in Canada with 3 million ounces plus that's located right along a major highway with grid power in Quebec. The property, as we talked about geologically, it straddles to a major structural corridor in the Casa Berardi. We've got 100% ownership of this entire boundary that's outlined. We've got prospective targets throughout the property. Clearly, the focus of the 12,000-meter program was really on the resource area at Douay, but we're looking forward to additional testing here at Joutel, as well as on some of these regional targets. With that, I'd rather turn it over to the expert who really ran a great program at Douay and Ian Cunningham Dunlop, who can walk you through what we completed and what we've achieved and what we've learned, importantly, from the Douay exploration work and where we go from here. Ian?
Great. Thank you, Kiran. I'll just sort of summarize high level what we accomplished this winter. It was we spent a lot of time late in the fall and early into January compiling the data, coming up with targets, built a structural model and we sort of went out into this program to sort of test that model. Ultimately, we completed 12,240 meters, 21 holes. The real focus was on the Douay resource area, and in particular, trying to convert inferred to indicated, testing big gaps in the resource, but really focusing on high-grade zones within the resource, particularly at Nika and 531. And then we're trying to establish continuity of these high-grade zones with sort of closer spaced step outs at the beginning, but then sort of swinging for the fences with deeper down plunge tests. We had a lot of success. We put out the 2 press releases. You've seen the results. We're pretty excited about what we got. So we're already planning a phase 2 follow-up for that in the fall to continue stepping out on the high grade at Nika and 531 and keep chasing it down plunge below 500 meters. There's a lot of other activities going on site. We've just finished up a sonic program, 27 holes we're testing regional targets, mostly to the northeast on both geophysical and structural trends. We're in the midst of a summer prospecting program on the midwestern part of the project, and we have consultants working off-site on the Douay resource update and internal scoping, which we hope to be able to talk about later in the fall. This is an oblique view of the mineralized zones. So you're looking northeast, outlining all of the zones that are part of the Douay resource update, and the gray outlines are the model pits. We've highlighted the 2 sort of best historic holes in gray, the 282X hole at the Nika zone, which was 1.8 grams over 100 meters, and also the hole 310 at the 531 zone, which was almost 9 grams over 29 meters. We targeted both those holes, did fairly aggressive step outs down plunge at the Nika zone with our hole 338, and we hit 2.1 over 109 meters. And at 531, we have the hole 351, which returned 5 grams over 15 meters, including 11.3 over 5. So pretty happy with both those results. I've also included on this, one of the regional holes we did was hole 339. It was a big step out to the west, 2 kilometers away to test a geophysical target. And we've hit the same structures and host rock stratigraphy that we see at the northwest zone and the Douay West zone. This is a long section looking slightly northeast. Again, the outline of the model pits in gray, the resource blocks in shades of green through red. You can see again the highlighted callouts that I just talked about on the previous slide, the 282X and the 310 and our step out holes in red down plunge from that. The red arrows you can see, the thesis that we've come up with in terms of the structural controls, we believe there's an earlier set of east-southeast trending sericitic shears intersecting slightly later east-northeast trending brittle faults fractures with calcite chlorite, magnetite, and pyrite. And it's the intersection of these two structural fabrics that are creating a moderate plunge to the southeast. So that's sort of what you're seeing in the red arrows. 531, we think there's also a secondary plunge possibly to the southwest related to an earlier folding event. So we sort of, played the odds and we're testing both of those trends at 531 zone. The main takeaway from this is all the resources above 500 meters and we're pretty much wide open below that. This is the Nika zone. All 6 holes intersected mineralization at Nika. The 338 in the middle, which was a 300-meter step out from the 282X hole. We continued another 300 meters down to 347. We hit strong mineralization in all these holes, sort of just a testament to the strength of the mineralizing system here. This a geological context, it's straddling the sort of the margin of the big Douay syenite intrusion. We get a mixed zone that's full of syenite dikes coming off that intrusion and then outboard into the green basaltic zone. So it's that sitting at that boundary in that mixed zone where we seem to get preferentially better gold mineralization. 338 was a great hole, 2.1 over 109, including 3.2 over 56 meters. It's the best hole ever drilled at Nika, and it's the 5th best ever drilled in the Douay database. and all of the holes define the corridor. 347 at the bottom was one of the strongest holes visually in terms of alteration and mineralization. 54X, which was about a 40-meter offset from 338, was also a great hole, returning 1.3 over 60 meters. So we've defined this corridor. This is a long section view looking slightly northeast as well. The purple outline is sort of the outline of the phenotized corridors. This is this sort of unique alteration corridor that we're seeing sort of consistently with the gold mineralization, and it continues to depth. The red dots are our pierce points. The black dots are the historic pierce points. But you can see from this that the system is wide open below 54X and 338 at depth, and also to the southwest. And we sort of highlighted this phase 2 dashed outline as where we're going to go next. And there's opportunities to extend a hole like we did with 54X. That was re-entering a hole we did in 2011, but there's other holes we can extend to hit the same plane. And also even re-entering the 347 hole, which looked like it ended in mineralization. This is the 531 zone, so we've jumped to the other side of the property, but we sort of took what we learned at the Nika zone. We took that same plunge thesis that we were able to work out of the moderate to the southeast. We applied it at 531. We saw the same fabrics. We saw the same intersecting shears and brittle faults. We see the same sort of diking coming off the main Douay syenite intrusion. We're a little farther away this time, so we're not seeing the actual intrusion itself. We don't get the phenotized halo around the intrusion, but we're getting consistent albite pyrite sericite mineralization that we see at the Nika zone. In this case, you're looking at a cross section. This is the cross section for the 348, 350, 352 holes. In this case, there's an ultramafic unit, which you can see in purple. It seems to be a very well-recognized footwall to the mineralization, and you can see some of the intercepts that we've gotten just in the immediate hanging wall to that ultramafic unit, including the 352, which 1.4 over 50 meters in the bottommost intersection on this cross section, at least 200 meters down below the pit. So again, wide open. We're going to keep chasing that ultramafic down with additional step outs. The other cross section, this is slightly farther west. This was testing more of sort of the southwesterly, shallower plunge. These ones had stronger, higher grade intersections. This one had 11.3 over 5 meters, and also 3 grams over 11 meters in hole 349. Again, you can see that same ultramafic unit coming off the bottom of the model pit, and the zone mainly sitting in the hanging wall to that ultramafic. And again, the strongest hole 349 at the bottom, still wide open at depth. So lots of opportunity to keep chasing both these zones, and it's certainly 531 and Nika will be an important part of the next phase of drilling. Here's the cross section showing those same holes. All 5 holes hit strong grades at 531 zone, and it remains wide open in all directions. And we're planning the follow-up as we speak. So the key insights, we've learned a lot this winter. We certainly recognize that there's many different styles of gold on the property. We've got the intrusion-related gold systems. There's also these late mixed zones, these breccias that we see around the main syenite. There's also orogenic style gold out in the volcanics, and synvolcanic exhalative style down at Eagle Tellbell, almost like a VMS type mineralization. Most of the zones are associated with these broad zones of albite, iron carb, silicification, hematite, phenotization, and pyrite, and they can all be used as a vector for gold. All the zones show a strong plunge geometry. We originally thought that everything plunged the same direction, but we now know that there's unique plunge controls as we go across the property from the west to the east side. These go from anywhere from southeast to southwest. They may be related to an earlier folding event as well. And there seems to be a periodicity to the zones across the 6 kilometers of strike that we've been testing with the main Douay resource so far, and that any of these zones can be at 500 to 1,000 meters apart, and we expect that to continue as we keep stepping out. In comparison to other deposits in the Abitibi, this is relatively shallowly drilled. Everything's about 500 meters compared to Malartic, Goldex, Laurent, etc. Just highlighting what we're working on now, we wrapped up the diamond drilling program, immediately launched a sonic drilling program. You can see the sonic drill up on the top right-hand corner. We're targeting that area that's about 1 kilometer to 1.5 kilometers northeast of the Douay resource area. targeting actually the Casa Berardi North Break, and also a blind geophysical target where there was a mag low sitting in the southern part of that ellipse that at least we thought had the potential to be another intrusion, another cyanide. The area out to the west is targeting a variety of targets. There's known felsic volcanic horizons going through there, so there's potential for VMS, but we also think there's Douay style systems in that area. So we have field crews out prospecting, mapping, soil rock sampling, even doing some ground geophysics to try and work up potential drill targets in that area. Just a quick bit on the sonic program. You can see the two grids we did. Grid B was on the Casa Berardi North Break. Grid C was chasing this blind geophysical mag low. Grid C was the one we're most excited about. We actually hit cyanite in one of the holes, which was the dream, and we see altered sediments and also alteration within the cyanite chips that were got from the bottom of that sonic hole, including fluorite veining, which is sort of a key indicator for a Douay style system. We see fluorite veining throughout the Nika and the 531 zone. So we're pretty excited that we think there's an intrusion with associated alteration around it. We're still waiting for the results to come back. We've sampled the basal till and the bedrock. We were able to core about 5-6 meters of bedrock, so we're waiting on those results. But we think we may be onto another potential target that we can follow up with diamond drilling. Well, just a quick update on Joutel. This has mostly been a desktop exercise. The historic Eagle Tell Bell mines. The Eagle mine is where Agnico Eagle started. It's their namesake mine. It was mined up until 1994, 1.1 million ounces from a fairly planar stratigraphic horizon, this semi-massive iron carbonate horizon that they mined sort of from shallow Eagle West open pit down through the Eagle mine and into the deeper Tell Bell mines. It's a very strong southeast plunge again to that mineralizing system. We've been working with consultants and our own exploration team on a massive data compilation exercise and targeting exercise to support a drill program in the fall. And we're just at the point of starting to apply for permit applications for that program. We also have independent consultants who've generated a first pass block model. We think there's real opportunities that Agnico left a lot of material behind when they stopped mining in 1994, and that we should be able to capture that unmined material and additions from our recent drilling at the Eagle and the shallow Eagle parts of the system to be able to incorporate and launch a first-time resource update for this. And we'll roll it in. It'll be all part of a greater Douay Joutel resource update and 43-101 report. So lots of moving parts on the go. This is a quick shot. This is a vertical long section looking northeast. Again, you can see the Eagle West open pits. All the gray are the mined out areas. And you can see this mineralizing system just keeps going down and down at depths to the southeast. We've highlighted some of the outlier drill intersections that have never really been followed up on in red. You know, lots of 10 gram over 10 meter type intersections, 20 gram over 8 meters, 10 over 8, and so on. And so part of the targeting will be going after some of these intersections to see if we can't, connect Eagle Shaft to the Eagle West area and also target some of the shallower areas around the Tell Bell shaft to see if we can't bring some of the zones back up closer to surface. So
yeah, think of Joutel as a high grade sweetener. Sorry, Ian. Think of Joutel, when you look at some of these grades, you look at the historical grades and million ounces produced at 6.5 grams. It's different style. It's a VMS sort of exhalative type deposit. We're not just looking deep. We're looking at the potential for some stacked lenses and different, this never really saw systematic exploration. We're going to get a chance to kind of get in there now as 100% owner. We did a 15,000 meter program at Eagle. Admittedly, that's a lot of drilling for a small piece of ground, and we had reasonable success there. But I think we're excited to take with the new team, with the new model, go out and start systematically testing the Joutel system, because we think there's a lot of potential high grade that was left behind that could really augment a potential mine plan here at Douay and Joutel.
Yeah. Yeah, well said, Kiran.
Thanks. So just in terms of, I'll take over and just recap. So next steps, what's coming? We had a 6.3 million approved budget for this year that was done with, raising good money last year with good long institutional and strategic investors. We had spent about 4.5 by the end of this year. So we do have budget remaining. At Douay, we've compiled all the results. We've got all the modeling. We're doing all that work back and forth with our with SLR on resource updates. So that was sort of all part of the understanding of the system. completion of our summer program, resource update we've talked about, updated 43-101, and planning in the planning phases for our follow-up program. Again, it's part of a bigger program that we intend to do in the winter, but there are certain areas, 5,000 meters is kind of limited, but it gets back to these particular areas at Nika at 531 where we can drill those relatively year-round because they're high and dry. The rest of the property, as people will remember, really does need the ground winter conditions for it to be frozen for us to mobilize rigs throughout the deposit. At Joutel, drill targeting and permitting for a 3,000-meter program that's underway. We expect to see a first-time Joutel resource in the MRE. And we do have a great project called Morris. It's our tertiary project, but we're pretty excited about it. It's in the Matagami camp. It is a high-grade potential VMS similar to other deposits in the Matagami. It's got the right rhyolites, the Watson Lake. One of our directors, the head of our technical committee, is a big fan, is a VMS expert, sees real potential here. So look for some news on that as well. Lots of things coming. I do want to mention, again, we couldn't have done this not only without a great team, but also with the great partnership that we've established with the First Nations in the region. We've taken real ownership of that relationship, lots of in-person meetings, lots of consultation in keeping with good company practice. And again, it just highlights, again, when we achieve the program, people focus on the numbers and the results. But I'm hoping that this webinar gives people a sense of the good exploration, site management, corporate management, and engagement practices that have been instilled in this company. It's like turning around a tanker ship. Those were not in place when I joined as CEO. They are in place now, and they're a good template for how we're going to operate the company going forward. Again, one last thing on Agnico. We do this, of course, with the support not only of shareholders, First Nations, but we've got a great partner. All of the things that Agnico has looked at in terms of the project, the geology did not change. I think they're seeing that we're doing better geoscience, which is leading to better results. So I think it's fair to say that all the people that are looking at this are pleased. They do have a back end on the property. They are our largest shareholder and are currently sitting. They increased their position in 19.9 last year with a placement to fund a portion of the drilling this year. They're at 16.4. And again, I believe they're very pleased with what we've done. So stay tuned. But their total investment to date, we're a 36 million market cap company. They've invested 25 million to date between project spending under the JV, as well as 13 million in equity investment. So it's a great endorsement of what we're doing here at Maple Gold. Cap structure, lastly, is we've got 456 million out, 500 fully diluted. High-low 52-week is 10 to 5. We're at 7.5, 8 cents today. Expect to see that re-rate. Hasn't happened. We certainly saw a good lift, and we traded tremendous volume. So we traded almost 70 million shares since we started putting drill results out in April. That represents a lot of transfer of like long focused institutional strategic shareholders picking up shares from perhaps fatigue. You never understand why sort of some retail shareholders are selling. I haven't sold a single share, nor has Agnico. So if you want to look at sort of where the long-term perspective of where we're going, don't just look at what we've done with the project, but this yet remains undervalued, although it's also got, we've got cash in the bank. It was 5.4 million as of March. We're sitting on 4 million as of today. We got some great money back from the Quebec government on our MATCs. It highlights another advantage of operating in Quebec. We've got great coverage, research coverage from Michael Gray at Agentis, Lauren McConnell at Paradigm, and a coterie of high sort of quality institutional and strategic shareholders to augment our largely retail shareholder base. I've continued, as has our management group, continued to increase our positions and ownership of the company. Again, just last thing to leave you with, and then happy to turn it over to questions. We've got the control of the property now. We're doing good exploration work. The resources there puts us in a very rare territory. We've got high-grade sweeteners, which we're systematically exploring, and lots of potential across the property. The location is potential tier 1. Partner is tier 1. And again, we've got a lot coming for the rest of this year. So with that, happy to turn it over back to Magda for questions, and looking forward to interacting with the audience. Thanks for your attention.
All right. Thank you, Kiran. Thank you, Ian. We've got an audience question to start off with. I've been an investor since 2018. Story is stronger now than it was then. Do you have any sense of like the top reasons why we remain at $8 per ounce currently?
Yeah, it's a great question. I appreciate your support going all the way back to 2018. I joined the company in 2021, and I've really only been the leader of this company since late 2023. As I said, it takes time to, we had a lot more money, we had a lot higher valuation. At one point, as I've mentioned before, it was 150 million market cap on the heels of the Agnico JV announcement. With an $1,800 gold price and only 50% ownership of the asset. Today, we're 36 million with 100% ownership of the asset. A $3,300 gold price, and importantly, continued support from Agnico, but a better sense of where we need to go to advance the project. It's a tough business, right? And if you turn turtle when the share price is under pressure, if you don't stay with the long-term vision and plan, then literally what happened with this company in the past was a bit of arm waving, a little bit of too much of the sort of overpromise and underdeliver. We've really turned that completely around. Maybe we're a little bit quieter. Maybe we're just going after the things. I mean, I certainly am not a wallflower nor is Ian. We've been out actually marketing quite a bit. It remains a tough market, right? Especially there's a haves and have-nots in the junior space. There are torquey drill hole stories that have less fundamental value, but are at $150 million market cap valuations today. I would argue that if you, as an investor, long-term investor, and others that are new to the story, look at everything that we've talked about, look at every box that we've ticked, look at who the partner is, and look at what we've done to understand and advance what is already one of just a handful of projects in Canada that sort of have that 3 million ounces with infrastructure, and with lots of upside. I would expect that, I can't speak to why it hasn't happened yet, because I think, some of this is also, we just started drilling in January. Markets are still what they are. And again, we can only put into place good process. Mother Nature, geology is going to give what it gives. We control the process. We've done good process. And again, 100% success rate in our first program with a new team, with a new approach, I think speaks to the potential of what we can do going forward. So I would say stay tuned. And for those that have been patiently waiting for the re-rate to come, know that that is firmly in our sights, and that's our objective.
And then I have a question about Agnico. Are you aware, why did Agnico sell 33.8 million shares to reduce holding to 16.4, and then on the flip side, a fund bought 10 million? Can you expand on this?
That is an odd question, and I'm trying to parse through what it actually is. Agnico has not sold a single share. Agnico's position was 19.9 as of the end of June last year, when they put equity into the company at a premium on a charity flow through, back end of charity flow through financing. It was done at or around sort of prices that we are at today, 8.5 cents back end and 12 cents sort of front end. Agnico's position was reduced to 16.4% when we raised 5.6 million institutionally in November, and that gave us the 10 million to go out and do a proper exploration program. If we didn't have the benefit of that 5.6, we probably don't do some of these bigger step outs that we did at Nika and 531. And I can't speak for Agnico, and nor would I ever deign to do that. They're a big company. They have their own priorities, but allowing themselves, their 99 is sort of a typical toehold position for senior companies that are invested in juniors. They run into different regulatory hurdles when they cross that 20% threshold. But it also limits their powder in terms of, like, we've always believed that, as have they, that this project supports bigger exploration programs and budgets. If they're right at the limit of that, they can't top up and write meaningful checks to support exploration. So, I mean, one of the things, of course, when you see, I think shareholders looking at this would see, I think you want to go back, and for the person that asked the question, Agnico's not sold a single share. Their position at 16.4 is keeping powder dry, that, on exploration results and success, we certainly expect to see, not only with Agnico, but other shareholders, long-term investors that we brought into the story that's seen the good work done. We're still a pre-revenue company that's focused on exploration and development. So we're going to need to go back to the market, but the goal is always to make sure that we're doing that in a capital efficient way and with the support of great partners. And we certainly have that in Agnico.
Thank you. And then we've had some questions come in about Joutel. Do you have any plans to expand the fall program beyond 3,000 meters? And if so, by how much?
Yeah, I think the 3,000 meters is what was budgeted originally based on the $400 per meter all-in drill cost, and looking at sort of what the available meterage is for the company. As we showed with Douay, we came in under budget, right? So we were originally 10,000 meters there, $4 million program. We expanded the program thanks to Ian and the team's great work. Also are supported by great contractors in Expo and Major Drilling. So we came in at 300. We were able to expand the program by 2,000 meters without, stretching the budget. I would expect we're still looking for those kinds of efficiencies throughout. It doesn't just stop with, I expect the new norm for the company to be in and around that $300 per meter all-in drill cost. If we maintain that, I think there is the potential to add additional meterage, both at Joutel. As we said, we've drilled 15,000 meters at Eagle, which is a smaller land position. So I think we can actually support a bigger program, certainly at Joutel. But right now, again, as I said, we try to under-promise, over-deliver, right? If we talk about the plans that we have, we certainly, and I think Ian can speak to the quality of the targets that we're working with a group out of Saguenay, Quebec, called Laurentia Exploration, with lots of expertise in this region to help us with drill targeting. We see a wealth. Ian, maybe you can speak to the potential we see at Joutel. I mean, I think there's certainly the geology supports bigger program, but maybe Ian, you can speak to that.
Yeah, no, absolutely. I think there's opportunities obviously in and around the historic workings, but there's also, there's parallel horizons to the main mine horizon. So we think there's opportunities in that up dip, down dip, along strike. There's offsets to the northwest where we think the horizon continues. So the 3,000 meter program would be a combination of sort of near mine tests, but also testing brand new targets along that same favorable horizon.
Yeah, and I think it's important, going back to the audience question about, do you see the potential to expand? Remember that these are first pass drilling programs where we already have something established. This is not, what you would say sort of greenfield, and so when we make a discovery, certainly the market starts looking at, and this maybe answers the earlier question about why haven't you gotten the re-rate? I think the market's kind of forgotten. Like you see some of these, as I said, they're new stories to the market. They make a discovery, all of a sudden the share price spikes. They're in that part of the Lassonde curve. I mean, when we do this kind of exploration at both Douay and Joutel, we're expanding on, in the case of Douay, a 3 million ounce resource base that's near surface. In the case of Joutel, a past producing mine complex that produced 1 million ounces at 6.5 grams, right? Mm-hmm. So when you do these kinds of step outs, people say, well, I'm trying to understand, is it open pit? Is it underground? Is it this or that? Like the reality is we have two known significant gold occurrences on a single land package that we control 100%. We have a much better sense of how we can grow and add quality ounces to that. So I expect to see, if you see where certain other companies, we've got peers in the region throughout the Abitibi that are trading at, several $100 million of valuation that have similar resource bases, maybe somewhat lower grades, but they're getting, that sort of average sort of 25 to 30, dollar an ounce sort of valuation. And $40 an ounce in the case of, mineable resources. So when you look at the strategy that we have, it is showing not only that there are quality ounces to add to a 3 million ounce resource base, but also showing what the potential development path is going to be.
Thank you. And then we have a question about sonic drilling. Could you go back to the sonic drilling and explain what gives you the idea that you may have found another potential Douay? I understand the structural indication, but not familiar with the sonic drilling.
So sonic drilling it's a sort of a newer variation on RC drilling. So sonic drilling it's a large diameter drilling system, track mounted drills. You're drilling about a 6-inch diameter hole, and you're collecting a continuous sample all the way down through the overburden boulders and into bedrock. We've been collecting an average of 5 to 6 meters of chips of the bedrock at the bottom. So you've preserved the entire overburden stratigraphy intact in terms of all the layering, and then you collect a sample from the basal till and the bedrock, and you can also do heavy mineral concentrates, pans of the basal till to analyze for gold grains too. So what we've seen in the bedrock, we've been able to create a bedrock map for both the grids that we did, so we can actually map rock types. We know we've hit a syenite, we know it's altered, and it has some of the same characteristic alteration and mineralization. We see the hematite, the fluorite, the pyrite in particular in the samples around that one hole. So we're just, we're waiting on the assays to come back, and hopefully that'll, we'll be getting anomalous gold in those holes that we can start putting together ideas for a follow-up diamond drill program. But the idea is it's a wide-spaced, first pass approach. It's how all the Douay deposits were discovered originally, was RC drilling of of airborne geophysical targets back in the 1980s, and so following up on the ground with RC programs and then diamond drilling, which is what led to the original discovery of the main zone at Douay. So we're sort of following in the footsteps of the first wave from 40 years ago.
And I think it's important too, great answer. And I think it's also important to note that sonic drilling and this grid drilling of some of these earlier stage blind targets, there's a way to do that with good return on investment, right? You can drill, we hired out the rig, it's $7,500 a day, and we drilled 27 holes. I think the comparable, if you were to do a diamond drill program or even an RC program, it would have been less data gathered, probably fewer holes. And so I think the goal for this is obviously, if you think you've got something that's early stage in perspective, there was a lot of looking at that overall geology map, which I flashed in the presentation, where the arm waving on blue sky potential, right? It's one thing for a company to talk about their exploration potential throughout their property package, but we've done, despite executing a major drill program with great insights and great execution and 100% success rate, we've done a lot to continue to build on what is a tremendous geological endowment that we're blessed to have here at Maple. Ian and the team, we're not just excited about one portion of the deposit or another and putting our tunnel vision on and saying we're only focused there. I think, if you find another Douay, what is the potential valuation of that, right? If you're getting $8 an ounce, that's $8 an ounce only for the established ounces at the Douay resource. That doesn't include any potential extensions, any resource additions, any discovery potential across the broader land package, and certainly doesn't include Joutel. So again, while I mentioned earlier that I thought we were undervalued based on all the boxes that we tick, just think about all the things that we tick when it comes to geology endowment and how Ian and the team are systematically advancing that up that sort of pyramid that we show. It's one thing to talk about it, but as we say, we like to just Douay it, right? So that's important for us to deliver and continue to advance those targets. Yeah.
And I just, as a footnote to that, part of what we're testing with this regional program is the sediments to the north, which have never really been tested. It's, it's certainly a classic Malartic style model with Agnico Eagle and East Goldie deposits all sitting in the sediments to the north. And it's something that's never really been evaluated. Douay, all the focus has been to the south in the volcanics and around the intrusion. So it's it's opening a brand new area. It sort of ties into all the claim staking that we did earlier in the year, as well as to sort of start looking at that area as a brand new target at Douay.
Got it. Thank you. And then we had a question come in about Joutel. How would you see a development scenario for Joutel, knowing, it's very, very early?
I think the best way to think about Joutel is it's a past producing mine complex where all the surface infrastructure has all been reclaimed. There is some ongoing reclamation work happening with our partner there. So again, the mineral endowment of what was left behind, you have underground workings, right? You have potential access to some of these higher grade zones. But it also it's flooded and would need to be dewatered for the purposes of access. We have, there's proximity here to a river, which is the Harricana. We don't look at this as again, and the grades would also support the fact that this is likely not, an open pit type of opportunity, even though we're some areas where we're looking shallow. I think the fact that you have existing infrastructure, again, some of what we're trying to do with the exploration is trying to demonstrate that there is enough material left at higher grades to justify the cost of, further underground development, dewatering costs, et cetera. And I think when you start looking at, this is not just, hey, we hope there's something there, and if we have it, then we have to figure out what we're going to do with it. I think it's additive to what we're trying to do at Douay. There are, when we talk about, mining scenarios for Douay, we talk about, okay, do we build a mill here? Do we look at existing infrastructure in the region? We do the same with Joutel, right? There are mills that are within, 50 kilometers of us that are, 750 ton per day, used to processing sort of high grade. So there is with either a central milling concept with, high grade ore from Joutel augmenting what we currently have at Douay as part of a bigger mine plan. That's one way to look at it. The other way to look at it is, and I think this is of interest to all Maple shareholders, certainly is of interest to us, amongst the management team and the technical team, is, do we have a potential second flagship here at Joutel, right? It really hasn't been looked at in detail. And you can see with all the reset work that we did over the last year, if you think we reset Douay, just wait to see what we've done with Joutel, right? We're not trying to arm wave it. We're trying to keep it and advance it steadily. But as I said, we get no value for something that was a past producing mine complex run by our partner. And when you start thinking about where is the best place, especially in a $3,300 gold price environment, where is the best place to go and find a new gold deposit? It's in the shadow of an existing head frame. Here, the head frame's been actually removed. We still have one at Douay West, so we think we're onto something there. But you know, and the Abitibi, as we know, it's a highway head frames, right? It's one of the blessings of operating in this part of the world. So we're in elephant country. We've got 2 known gold occurrences, and I think details, as I said in my quote on the July press release, the details, the questions that we're going to hopefully answer in the second half of this year will get us closer to what the audience is asking about mine plan. It's still a little bit early, but trust me when I say Ian, myself, and the team are doing great work behind the scenes with our consultants and engineers to come up with the answers.
Got it. Thank you. So that may have answered my next question about the scoping study on the horizon. Would it be an internal one or something that's released to the market?
The former, because I think what you need to do is, and I think people can see this clearly, that the market's impatient, right? And this is the reality: is if I just delivered, I think the company maybe got itself into trouble in the past with, delivering what it thought the market wanted and then sort of under delivering that, right? What we have sort of set is, under new leadership, is a long-term plan to systematically advance a district scale gold project in a great gold camp, right? And establish something that's exciting, that's got critical mass, that has the right momentum. And why are we doing that? It's to lower our cost of capital, so that we can do bigger drill programs. Because again, even when we talk about a 12,000 meter program or a 3,000 meter program at Joutel, we had budgeted based on, we're a 36 million market cap company. We raised 10 million, in cash to be able to go out and drill. 15,000 meters is nothing to sneeze at, especially when you had the success that we did, but it is still a very small program for a project that has this kind of geological potential. So internal scoping study, what does that mean? It means that with our engineer, we are looking at not just let's try to capture every ounce that we've got here and make it as big as we can, which would, potentially blow out your CapEx, stretch credulity, and, give you lots of overhang saying, okay, now what, right? I think what we're trying to do is we're trying to do optimization work to define what is potentially open pittable and what is also potentially underground or bulk tonnage underground mineable. What is the trade-offs between, whole ore leach versus gravity cyanidation, flotation cyanidation type of gold recovery process? What are the optionality things in terms of, building a mill versus utilizing existing capacity in the region? You don't want to put out something public and then have to answer all those questions, right? I think you need to kind of do that work internally. It helps not only to give us a sense of what the potential, NPV, IRR, economics, and that's obviously something that when that becomes public, that's another key driver of potential re-rate, right? Because when you start to see conservatism and, something that's actually buildable, you would expect to approach, more like that 40 to 45 peer group average for mineable ounces. But what I expect to see, we have a lot of data. We have almost 300,000 meters of drill core at Douay. We've got initial metallurgy already complete. We've had our engineers do a gap analysis. So this is well underway. We think we can, immediately on the heels of receiving the results of internal scoping study work, we think we could be within 6 months from the time we hit go on a PEA. We could be within 6 months of delivering that. So again, there are a couple of steps, a couple of hurdles to cross here. And as I said, we're targeting scoping internally by year end. But if we hit go on a PEA, I think you could see that as early as mid next year.
Got it. Thank you. And I believe you said Q4 for the resource update plan?
That's what we're guiding towards. Obviously, if we want to do it correctly, there's a lot of work. You're going to see something not only in terms of, the ounces and the total count. I think there was initially a question about how come you only increased the resource by 100,000 ounces, over all those years. Well, that was done by a previous team, right? There was a 2019 and there was a 2022, and that all predates us. So, they only increased by 100,000 ounces. Yeah, that's not what we're shooting for with this resource update, right? But it's not just the ounce count, which I know the market is clearly focused on the ounce count. It's about the quality of the ounces and the quality of the modeling work. And there's a lot of back and forth, right? When you're domaining, when you're looking at, there's not just a methodology of saying, well, we've got more data at Douay West, so we should make the rest of the deposit, sort of fit that Douay West model. Ian and the team have done a great job of putting a first-time structural and structural interpretation together, which we vetted with this program using all oriented core at the recommendation of our partner. So we're going to be getting a lot more data. We're doing detailed modeling back and forth with SLR. The goal is to deliver something that looks more like a geo mine met type of model that can inform future development studies, as opposed to something that's got, holes in it. And the other thing that exercise does for us is it tells us where we need to go to incrementally add. So why would you put out a 4.3 million or 4.6 million as an example type of resource if you can do a bit more drilling and maybe get that up to 5? It'll help to show us both at Douay and at Joutel where drilling will actually deliver ounces, right? Or has the potential to deliver ounces. So there's a systematic approach here, but I think it's reasonable and fair to say Ian's got some pressure on him, but he's doing a great, he seems to be a guy who can really focus under pressure, which sort of is in keeping with the rest of the team. So I think we're conservatively guiding towards year end, but if we can deliver it sooner than that, certainly we'll look to do that.
Got it. Thank you. Well, it looks like there's a lot of things happening into the second half of this year, so we'll definitely be looking for all those news items. Is there anything else you wanted to mention before we wrap up?
I think we covered a lot. I just want to thank Ian and the entire Maple Gold technical team, our technical committee, advisors, our partner Agnico, the First Nations, everyone that's contributed to really, we set out with a goal. We talked to the market quite a bit about this whole reset that needed to occur. You're seeing phase 2 of that, which is good systematic exploration with demonstrable, and significant advancements in the understanding of the system, great drill results, great execution. So we look forward to coming back with more, but this was a very comprehensive update. We certainly appreciate the support from you and the entire Adelaide team. Look forward to coming back again.
No, thank you, thank you, Kiran. Thank you, Ian. If anybody has any other questions or would like a follow-up, please email info@adcap.ca. And have a great afternoon, everybody. Thank you. Take care.
You too.
Thanks.
Bye.